Richard, thank you so much for joining us here at FundForum International. You featured on panels today that are specifically about ESG. That in itself is quite interesting, that a conference like this is having its own sessions on ESG now.
Yeah, it is, and we're really happy about that. I mean, we're believers that ESG is a strong driver of returns and risks for investors, and that's why we've embedded it into our investment processes.
Are you seeing a real change in mindset there? Because this has been a buzz phrase that's been around for a long time, and people have been sceptical about whether that's something that companies have been paying lip service to. Is this now truly an integral part of portfolio picking?
I think it is for many investors. I think there's a growing realization that there are some what used to be called extra financial factors that really haven't been taken into account by end investors. I think that's been a debatable point for many years, but I think particularly in Europe, there's now a more of a settled agreement that there is something there.
There's good evidence that this is good for the bottom line, is what you mean?
Well, it's good evidence, I think, that companies that have strong ESG profiles produce good fundamental results. And also good investment results. It may not be a first order issue, but it may still be an important issue.
I guess because good governance perhaps goes with good performance.
Well, I think good governance we notice in particular because with our index funds, a lot of our assets are indexed. We own all companies, so we see all of the ones that have had troubles over the last several decades. And at the heart of a lot of those problems are governance issues. Therefore, governance, stewardship and engagement are particularly important to us.
Do you think increasingly the end user wants to see this and wants to feel good about what their investments are doing?
Well, I think there's a spectrum of end users. We've definitely got a growing constituency who want to have impact with their investments and they want to have an impact that might change the world we're living in. But I think the growing majority may not necessarily want to have the same sort of impact, but they want to know they're investing in companies that are going to do well in the long run and not just be run for short-term, non-sustainable reasons.
In terms of sustainability and picking those companies, are there areas that you're seeing becoming not so much sin stocks, but ones to be more cautious about that perhaps you wouldn't traditionally have thought of in that way before? People have talked about some of the tech giants perhaps even becoming in that area because of responsibilities around privacy and data breaches, etc.
Sure, but I think away from corporate governance, the prime issue is climate and carbon and how a company is going to perform in a very different climate environment or a carbon environment. So that's absolutely front and centre. But then there are always emerging concerns. You mentioned a few technology disruptions that people might be having reservations. And I think at the heart of it is the question, are the things you're doing now really going to be sustainable over 5, 10, 20 years? Because our clients have very long-term time horizons.
One of the panellists on one of the panels today talked about how when I'm about to retire and it's the next generation of investors that are going to be truly committed to this. Do you see this as a bit of a generational thing too?
There is an element of a generational thing, but if you look at the distribution of wealth, obviously it's slewed towards older people. But as that wealth goes down through the generations, then I think people will change their viewpoint. But I think even for older generation, they certainly want to make sure that their investments are able to support their very long retirement in some cases. So it matters an awful lot, the decisions that people make now, even 10, 20, 30 years out.
Because there's talk of us all living for 100 years, so we need to be making sure that those funds last a long time.
Yes, indeed.
What have you gleaned today and what have you hoped to impart, if you like? What have the key messages been?
I think it's healthy that we've got some degree of consensus around ESG and the fact that it's very important, but I think it's also healthy that we disagree. So there are people who want to go a little bit further in this area into impact investing, and there are people who say, well, what happens if this becomes too mainstream and maybe it's even overpriced? So I think it's really important, and it's true in all aspects of investment, you have a very strong debate and you do have disagreement. If we all agree, I think that does run the risk of groupthink.
And also there's new areas being talked about all the time. I heard people talking about SDG and actually societal change as well as climate. So there's areas of this as well that are going to develop over the coming years.
Yeah, well again, we have to differentiate between the financial results that we want from the companies we're investing in and the potential to influence things that might change the world we live in. And some people want to do both. Some people just want to do one. But there's no doubt things like the SDGs are increasingly important to investors who want to make sure that the world they live in is one that they feel comfortable with, and they want to use their capital to do that.
Is it far-fetched to think that the money world really care about this? Isn't the bottom line always going to count the most?
I think the bottom line does count the most. And that's the reason that we're interested in doing it, because these long run factors are very, very important. And I think we're often accused of being short term. I don't think that's correct, but I think it's an accusation that should cause us to think about ESG in a different way.
So that's what you'd hope to impart perhaps to those who are here today, that you want people to see true commitment for the long term?
I think yes. I think also educating those who are a little bit sceptical about ESG, showing them the evidence and asking them to think how they're going to build it into their investment processes in a way that's balanced, so that they're not like a golfer with one club and the only thing they do is ESG, but they're a really balanced player and they can use a lot of different clubs to get the right result for their clients.
Great analogy to lead that on. Thanks so much for joining us.
Thank you.